We expect a lot of what's happened throughout the rest of earnings season. We've seen that earnings season is about 8% down right now. So far, when you take out energy, it's down 2% on the earnings side. So we expect much of the same. I mean, basically, we've had a strong rally off of the February lows. So any earnings beats have already really been priced into the market right now.
Kevin, we're looking at the prospect of a Fed hike. Some say June, some say July. Will that change anything for corporates?
That should not change anything for corporates at all, because the Fed actually has communicated that they expect to raise at least once this year. I mean, if you go back to December, their dot plots indicated they were going to raise 4 times, and that led to extreme market volatility in January leading up into February. So basically the market told the Fed, don't raise 4 times, but right now the market is going to be fine with one more rate hike.
But Kevin, what about the banks? Surely if we get this rate hike, that is good news for the banks, which altogether you could see the earnings season was not too inspiring looking at some of the financial stateside.
You know, with the banks, a Fed rate hike really won't move their stocks one way or another. What's really going to move the bank stocks is the regulation, the flattening of the yield curve, the overall economy, trading volume. So right now, a Fed rate hike is being priced in, and you're seeing that across the board. But if you look at the bank's earnings season, they're down 14%. When you look at the real large mega cap banks, their earnings were off 21%, and that does have to do with the regulation environment. If you look at the jobs that are being added in the banking sector, it's all in regulation and compliance.
And Kevin, let's get your views on tech here, because it was one of the most interesting sectors we saw in the current earnings season here. Winners, losers, who came out on top?
You know, the clear winner actually this earnings season and last earnings season is Facebook. So if you look at their sales growth, over 50%. Earnings growth was over 83%. And Facebook is only scratching the surface on what they can do. They actually haven't unlocked the value of all their assets, so including Instagram, right? They've started to implement ads there, but they can do a lot more, including more video ads. They haven't even touched WhatsApp, and they've got over 1 billion users on that. So the interesting part about Facebook is that they can consistently, going forward, increase their earnings as well as their revenues, and that's indicative of a stock you want to be in this earnings and in this market environment. So Facebook is doing well, and it's the political season, so there will be targeted ads.